get good participation, I will go ahead and post the recording. If y'all don't participate, good luck with that. I'll keep the recording for myself. Good information for me to look back on whatever I was teaching to myself. We go with that? All right, perfect. Here we go. All right, so what I wanted to start off with today, first of all, is I wanted to. I'm still super grateful for all 12 of you that hopped on. I appreciate you all. It's a Friday night. Y'all could be anywhere. I actually turned down. I had already scheduled out this training. Otherwise, I would be at a Wiz Khalifa concert right now. But I had already scheduled out the training, so I'm like, damn, I really got to give it to the people. So sacrifices need to be made to get better in this industry, get better at trading, get better at whatever it is that you want to do. So missing out on Wiz Khalifa concert tonight, no worries. Like, hopefully he's still alive and we can go to another concert another time. Plain and simple. Anyways, if y'all are fired up, if y'all know that 20 BT works, let me get a 333 in the chat right now. Let me get a 333 in the chat right now. Because 20 BT, for all the individuals that have been, sticking with us and have been trading this thing, they know this thing works, right? And now what I'm about to do is I'm just going to go ahead and put it on steroids, right? You already think it's on steroids, but let's give it more steroids. Let's make this thing so jacked up that, even when you lose a trade, you know that you were supposed to lose that trade. Are we ready for that? Because it only looks like Juraj, Jose, and the other Jose is ready for that. 3 people. Only 3 people is ready for that, and we got 11 people on here.
I can't type, bro, so you're going to have to see my face reactions, right?
I got you, bro. I got you. All right, bet. All right, here we go. Here we go. Remember about that participation thing, guys. I'm going to need your participation throughout this because I'm going to go in, right? I'm going to go in on the psychology behind this thing. I'm going to go in on, really how simple trading can be when you break it down to what it actually is. For the individuals that, some people got a sneak peek of today's training because they had one access to a one-on-one with me because of the fact that they were consistent on our side of the things on Jersey Squad. But those people that got the sneak peek of it, I'm still going to give you more value on top of that. All right, so here we go. The first thing that we need to understand is the following things, right? The first thing that we need to understand is the markets. Let me type this out. All right, that's going to be annoying. Here we go. Markets only do 2 things. The markets only do 2 things. If you have an idea of what those 2 things are, let me get that in the chat. The markets only do 2 things. Let me get a couple guesses in the chat at least. Right, going up or down. Okay, that's a good idea. Going up or down, right? Up, down. Yep. Huh. There you go. Give you your money or take your money. I like that. Impulse and correction. Yeah, you nailed it, bro, because we just did this training like an hour ago. he got that part, right? That's what it does. The market only impulses and corrects. There's only 2 kinds of markets: impulses and corrections. Consolidation, I don't even treat as a market. It's just not. You're not touching it, so it's not even a market. Like, delete that market from your life. The markets is only going to do 2 things: impulse and correct, right? Even consolidation is technically just a correction or the beginning of a reversal. So this is the first thing that I would go ahead and type or write down into your notes, that the markets only do 2 things, which are impulse and correct, right? In an uptrend, right? This is what the market looks like. This is what the market is going to look like. Boom. Fuck, I messed it up. Hold up. I'm just gonna write it with the brush. Easier. Here we go. So you have your low, your high, your higher low, higher high, higher low, and higher high. Right? And this is uptrend. Fuck. This is uptrend. Okay? That's your uptrend, right? These moves right here are impulsive. These moves are corrective. In an uptrending market, we only want to catch the impulses. Trade the impulse because the trend is our what? The trend is our what? I see Bryant mouthing it out. Y'all can copy off of him.
Friend. The trend is your friend.
The trend is your friend. Right? Put it in the chat. There we go. Perfect. Right? Your trend is your friend. So when we have impulse correction, don't worry about the correction. Don't worry about catching these pips. Don't worry about them 50 pips because the impulse is 100, right? The impulses are going to be faster, stronger moves. That's what you want to catch. You want to catch the momentum. You want to catch the wave. Don't worry about the wave crashing because it's temporary. Another wave is coming, right? Y'all go to the beach. Y'all know the waves come, the waves crash, and then another one comes after that. The markets are a continuous cycle, right? We need to understand, right? The psychological impact that we have is when we see a move like this, right? We think we've already missed the move, right? When we only see this part of the picture, when you only see that part of the picture, you're like, damn, I missed the move, right? Let me get a 444 in the chat if y'all have ever said, damn, I missed the move. I missed the move, right? I missed the move, right? I hear it so much. And, recently it's been annoying the crap out of me. I'm like, what do you mean you missed the move? There's 30 different markets. Like, how many, what, like, I don't even know. There's like a million Forex pairs for you to trade. There's like 1.5 million definitely crypto pairs for you to go ahead and trade. So what's the rush? What's the rush, right? You need to understand that this market, treat it like your ATM. This is what I've been telling my team recently, right? Treat the market. Yo, that is going to annoy the crap out of me because I do need to keep drawing, but I want to type too. Treat the market like an ATM, right? Treat the market like your ATM. There will always be a setup. There will always be a setup, whether it's on a small time frame, whether it's on a big time frame, whatever time frame. If there's always a setup, doesn't that mean there's always money for you to go ahead and make? Doesn't that mean you can put in whatever lot size your account can handle, which is your pin, your setup, 20 BT is your pin for your bank account to go ahead and pull that money out in the market. Does that make sense? Let me get a 444 and let me get a 222 in the chat. If that's starting to make sense, right? The market, you guys see the market? Like this is a Forex pair, but you guys see how many times, like, after each correction you could go ahead and place a buy? and went ahead and placed a buy? Like, how many times you could have done that in this move? And you guys are still thinking I missed the move? You guys are still thinking I missed the move? You see how many times the market stayed with the trend? You see how many buy positions you could have placed on this? You see that? Do you guys see that? Let me get a 111 in the chat. If you see how many times the market came down to support and then shot right back up on this one pair. This one pair has been doing the same exact thing since May 3rd. Since May 3rd, this pair has been on an uptrend. Everyone's trying to figure out when to sell it. Does it matter when the sell comes? Does it really matter if we're on an uptrend? If the buy from the bottom, right? This pair moved over the course of 65 days, 470 pips. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Like at least 10 to 15 good times you could have went ahead and placed buy. 10 to 15 times you could have went ahead and placed buy in the past 60 days. If you won 15 trades in a row because you knew the market was still impulsing to the upside and it hadn't broken structure, you would not have lost a single trade on this pair since May 3rd. Just by understanding market structure, right? I'll be the first one to admit when I learned this right here, I took this for granted. You take this for granted. You think, yeah, that's basic stuff, right? The market's creating high, lows, highs, high lows. All this, you think it's basic stuff, right? Most of us will be like, yeah, But then when it comes to it, all you guys would still sell right here. Why would you sell right here when we're still in an uptrend and this is just a correction? Everyone would still be selling here. There's no reason to sell yet. There's no reason to sell yet until it's going to happen these coming weeks, right? We're going to catch this thing down now. We're going to catch this thing down now. All you have to wait for is the break of structure. Structure is king. Structure is always king. So if this is an uptrend, right, then the opposite is a downtrend. Right? This would be our impulsive. And then the other way would be our corrective. Guys, just mute yourself out. Mute yourself out. Whoever that is. Hold up. I can't deal with that. Impulsive and corrective. Impulsive and corrective. These two pictures, I would highly recommend that you put up in your room somewhere. That you draw this into your notebook. Because this is all the market is. Don't try to figure out where am I seeing this harmonic? What is bounce back calling? What is gold cup calling? They're all everything. The whole market is this. The whole market is highs and lows and lower highs, lower highs, lower lows, lower highs, and lower lows. When you really understand this, when it really clicks, because right now it's not clicking. I promise you right now, it's not going to click. But there's two kinds of people. You either learn, well, actually, there's three kinds of people, right? The people that are going to learn from my mistakes and Bryant's mistakes and all the other individuals in our chats, people that have been trading for a while's mistakes, or there's people that are, you're going to learn from your own mistakes, and then there's people that are not going to learn at all. Straight up, right? So this is what you need to understand. This is the basis of everything, right? This is the basis of everything. So even when those guys in the trade house are calling their sniper entries because they see the liquidity in the market, this is still the king. The trend, the start of the trend is determined by the break of structure. The start of the trend is determined by the break of structure. And if it's a true break of structure, you're always going to get that retest. And that retest is their pew pew entry, which is also their, liquidity zone, whatever you want to go ahead and call it, but it's all market structure, right? And 20BT allows the average individual, once they understand this, and apply it to the chart, along with using the tools and products of the Harmonic scanner and using support and resistance, and then finally lining up the 5 steps, you're going to become a deadly trader. Don't believe me? Let's look at some of the setups, okay? Let's look at some of the setups, right? So this was a setup from last night, right? Technically with 20BT, after we fell off this resistance, you could have definitely sold it at least to the support and held it for 29 pips, okay? Euro USD, this didn't do anything. No worries, because we caught this move. We caught that breakout impulsive move because we knew the break of structure was coming. We knew actually, it was not even a break of structure. It was the continuation of structure. See, the market had already told us we're only going to go in up moves now. We only care about the up moves. I don't care about this down move. I could have capitalized on it, but the bigger moves are going to be to the upside. So I know any sells are going to be short-lived, right? Yes, this was a 200 pip sell. Yes, this was a 155 pip sell. But this buy was a lot faster, and it was 223 pips. This buy was a lot faster, and it was 221 pips. You understand? Let me get a 333 in the chat if you understand that the trend is really your friend. The break of structure will give you the massive moves. The break of structure will give you the massive moves. All right. Let's look at a couple other setups just so you guys really understand this. USD right? I caught this. I had caught this sell. I had caught this. Which one did I catch actually? I had caught this one after we broke this structure right here. The day before yesterday for a nice 50 pip run, right? This was the correction. This was just a correction. We re-broke structure again, and we started to form head and shoulders. It's another 58 pip potential. Even it's probably going to keep going, honestly. We'll look for retests and re-entries. AUDNZD got into this trade yesterday. I closed out with just about 8 pips, but it went for 23. I didn't want to be in this trade forever because it's AUDNZD. But you can see structure shows us impulsive move to the upside. This is a correction, so this will probably continue. GBP NZD is practically going sideways, so I really don't care about that one. GBP USD, this is a big one. when a harmonic is this big off the harmonic scanner, this thing is gonna hit like TP1, TP2 easily every single time. When it's this big, when you have a harmonic pattern that is this big, I don't think I've seen a single one not hit TP2. I don't think I've seen a single one not hit TP2 on the scanner. This thing has just hit TP1. And where was our entry? Right there. Right there. This was our initial entry. Broke structure right here. You could have entered here. This was the more conservative, more aggressive right here. This is the more conservative entry. If you were still holding on to that trade, that was 78 pips. This retest right here, again, was for another 57 pips. Okay. Euro NZD. This was something I was marking up. We were talking about this. I'm gonna erase that. I don't remember where I put the harmonic on that. Don't worry about that. Euro JPY. This one, easy money. Last night, super simple. Impulse, correction, corrective move. This broke structure, retested, gave us a more conservative entry right here for 35, aggressive entry right here for 72. There's more. There's more. AUDJPY. Broke structure. Broke structure. This was a little buy. You could have taken this up. That'd be up about 14, 15 pips right now. It's AUDJPY, so it's slow. But understanding this from before, you would have seen the break of structure. Impulsive move is stronger. 4 days, 150 pips. NZD CAD. Where we at? Nothing. GBP JPY. Impulsive move. Impulsive move. Correction. Retest. Sell. 97. If you wanted, you came back up into this zone, you could probably sell it again. But this is a lower probability than this one right here. But AUD CAD, right? The harmonic did its thing, but now we broke structure. Now we broke structure and retested right here. Here's your entry. 50 pips. Want me to add it all up? Want me to add all this up? We caught Euro USD up for 72. USD CHF down for 50. Anyone got a calculator? No worries, I got it. 72 plus 50, 122. AUD NZD went for 23, 145. GBP USD, depending on your entry, 78 and 57. I'll just put the 78 one in. 223 pips so far for the week. Euro JPY. Conservative entry. I'll give you that one. 35, 258. AUD JPY up 15. So let's put 15. NZD CAD didn't do anything. GBP JPY 97. 370 for the week. AUD CAD up 49. 419 pips for the week. This is people's monthly dream pips. And you could catch it in a week by understanding market structure and using one product. Focusing on one thing, not 100 things at the same time. There was a couple more other there was a couple other things, Juraj, but I the ones I have listed right here right now are only the Hugo's Way one that popped up since that one started working. But I hadn't done the Trader's Way because that would be more pips. But all good. So you guys see that. You guys see that this has results. And the stop losses on these trades is no more than 30 pips. No more than 30 pips, right? when you understand how to trade this from a naked chart standpoint, it's you get the wick entries, right? Will I be talking about BT20? Yes, I will. Yes, I will. You got to understand that this where'd it go? What chart was I marking it up on? Euro GBP, right? There it is. This is what you need to understand first. This, when you understand this, you can understand any strategy very, very simply. 20BT, the indicators are just to give you more confidence as a new trader. The indicators give you more confidence, less drawdown. That's the goal with 20BT, okay? So let me tell you how I entered Euro USD for the buy down here. How did I enter Euro USD for the buy down here? Understanding this, because it's not on here, but there was another harmonic pattern that I think that it got erased. There was this harmonic pattern right here for the buy. We were looking for break of structure. Break of structure occurred at this level right in here that I didn't have drawn up. So after break of structure occurred, you would go down to the 15-minute time frame. Look at how beautifully that zone is broken and retested. And let me show you where your entry would have been. This is your entry candle. Flat bottom, EMA's crossed over. This is our transition zone, because transition zones occur around what? Areas of support and resistance. This is why it's so important for you to understand market structure, because the support and resistance, you have to understand what support and resistance levels are actually gonna be support and resistance. What can you actually trade off of? Not every level of support and resistance is gonna be one for you to trade off of. Because if you would have just understood, right, support and resistance, and you would say, okay, I can see this. This is resistance. Let me look for the sell. If I'm looking for the sell in this area of resistance, I'm going to be looking there forever. Why? Because the market shifted in structure. The market shifted in structure. If the market shifted in structure, I should only be looking for levels of support for entry and not worry about the sell until I see another break of structure. Is this making sense so far? If you guys are getting value from this, let me get an 888 in the chat. Let me get an 888 in the chat if you guys are getting value from this so far and you're kind of understanding what I'm putting down here. Okay, perfect. Here we go. This candle right here was your entry. 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 Okay. I'm gonna switch it back to candle view. And I'll show you the candle you would have entered at. Right after that impulsive move, you would have entered this trade. You would have went 9 pips into drawdown. Your stop loss was 30 pips. It would have never got hit. 9 pips into drawdown, right? Risk to reward, guys. Risk to reward. I found on a one, like I found when these trades, when we actually line up, like when you have a good lineup, if you put in a 30 pip stop loss and you lose the trade, don't worry about it. You it wasn't really that good of a trade if it hit stop loss, and it will usually go for about 90 pips if it's a really, really good one. And that's like on a pair like GJ, but this is Euro USD, right? This is Euro USD. So this one went for 39 pips. You're risking 30 pips, but really you could have exited the trade if you saw, market break here. If you saw the market break and kind of, start doing stupid stuff here, you could have, exited the trade. But your risk was, you only had 9 to 10 pips of drawdown for 40 pips. So you had a 30 pip stop loss. You're catching 40 pips. That's it. You're done for the day. One setup. You're done for the day. 220 pip setups will give you 10% for a day, 5% per trade. If you're risking 5% per trade, if you want to go ahead and risk a little bit lower and go for 3%, right, is what they recommend, 2 to 3%. But once you have a deadly strategy like this, 5% is a little bit more aggressive, just moderately more aggressive. But with 40 pips on 5%, you're golden. You're golden. That's pips. That's money. That's money in your account. With a $200 account, you could be trading a 0.05 with a 30 pip stop loss, right? Catch 40 pips and be done for the day on one setup. Trade like you only got 10 bullets for the week, right? Some only trade with 10 bullets for the month, right? Some people only like to take about 10 trades for the month. But you got 10 trades for the week, right? 2 trades a day. If you're trading 5 days, you're going to hit that 10% goal. If you lose 1 or 2, that's fine, right? You'll land a little bit short of your goal. You get to maybe 40% for the week, 35% for the week, which is still amazing. 35% for the week, right? If we divide that out by 5 days is what? 35 divided by 5, about 7% a day, okay? So I want you to watch this. I want you to understand this, and then, each time you want to go ahead and over leverage, I want you to go ahead and humble yourself. I want you to look at this chart and humble yourself, okay? $200 account doing 7% a day. That's saying that you're going to lose 2 to 3 trades out of the 10 for the week, right? If you don't lose any, you're going to do more than 7% per day, right? And let's just say you compound that for 60 trading days, which is about 3 months, right? $200 account could turn into $11,000, well, basically over 10. If you guys didn't know this about trading, when you get to $10,000 in your trading account, it's very simple for you to go ahead and easily withdraw half of that balance every month if you're catching consistent pips. Catching consistent pips, if you have an over $10,000 account, you can easily withdraw half of that balance every single month, right? For some of you guys, an extra $5,000, well, not some of you, all of you, an extra $5,000 a month would be nice. Let me get a 777. Nah, let's do dollar signs in the chat. If an extra $5,000 a month would be good for you, would change your life. An extra $5,000 a month from your smartphone, trading a strategy that requires you to draw a couple lines on the screen and then wait for a couple lines to cross. It's not hard. Stop over leveraging, right? And I'm not just gonna, I'm not gonna say I haven't done it. Everyone on this call has done it. Everyone on this call has done it, right? Stop. I'm telling you, there's no point, right? If you have a good run on one or 2 trades, even for the week, you don't have to trade anymore. Just stop, right? You have to learn. That's been the biggest battle for me as I've been progressing as a trader, is after the impulse, after you grow that account, you're trying to stretch this thing. You're like, can I? And then what happens to a market after that? What happens to the market when it's starting to do that? What happens? Everyone type what happens to a market like this after that happens. After you start to get stupid little moves like that. If you guys have been trading for long enough, yep, it goes down. And it doesn't go down to here. It usually goes down to here. If you have noticed that, if you guys have noticed that, let me get a yes in the chat. When you start growing your account like this, then your account corrects itself like this. Yes? Yes, your account corrects itself like that. And then you're like, damn, trading doesn't work. This strategy doesn't work. Let me go on to the next strategy. Right? We've all been there, we've all done that. It's time to stop, guys. It's time to stop. The markets are super, super simple. Right? What have we learned in this call? The markets do only two things, and what are they? The markets only do two things, and what are they? What are the two things that the markets do? Come on now, let me get that participation. I want to give you guys this recording because I killed it. I know I killed it. Impulse and correction. Impulse and correction. That's it. That's it. There's no secret to the market. It's very simple. The simplest concepts still apply to trading, yet we forget. Right? We forget. Once you understand this, all of this, along with the fact of this, that's it. You're good. You're good. 3 months. 3 months is nothing. You've been broke for 20, 25 years already, right? I'm 19, about to turn 20, right? Been broke already for 20 years. What's another 3 months? What's another 3 months? Right? Stop trying to get rich tomorrow. You're going to catch pips. If you mark up the chart like this, if you mark up the zones accurately, trade the pairs, only the pairs on the harmonic scanner, and you use 20 BT on the 15-minute or the 1 hour time frame for an entry with a 30 pip stop loss, and you take 2 to 3 trades every single day, right? And you don't win at least 7 out of those 10 trades, or even at least 6 out of those 10 trades, you're doing something wrong. You're doing something wrong. Right? It's consistency. It's daily method of operations. It's all those things combined, right? If you're not marking up, 5, 6 charts a day, what are you even doing? Watching all the IML TV in the world isn't going to get you rich, right? Watch 1 to 2 sessions. That's what I recommend. 1 to 2 sessions IML TV a day, okay? This is what I've kind of got in my daily method operate. These are things that I've been ending up to do pretty much every day, no matter what. And this has changed my trading massively. 1 to 2 IML TV sessions a day, right? Continue to learn, continue to absorb more knowledge, but always understand structure is king. Follow a compound plan. Okay? And markup. Well, I don't even need to put that on there because that's just, my lifestyle now. I mark up every day, even when the markets are closed. Mark up every day. Trade only. Breakout. Retest with 20 BT. It's that simple. So we definitely need Harmonic Scanner to use 20BT. No, you don't need the Harmonic Scanner to use 20BT. I highly recommend it if you're going to trade Forex pairs. If you're going to trade Forex pairs, there's no reason you're not using the Harmonic Scanner. There's no reason you're not using the Harmonic Scanner. The Harmonic Scanner is so deadly. Even when it's calling a buy, if you don't get that structure shift, if you don't get the shift of the structure, guys, it's not going to go for the buy. If it is, it's going to be short-lived. So don't worry that you missed the move, because you can still, guys, how many times, you know, have you seen the harmonic pattern, right? Market is here. This is the entry point. This is the stop loss. Okay. And you just, if you know, this is where most people go wrong. They enter right here. They enter right there at the entry point. They're like, okay, it's gonna reverse. What? Are you kidding me? If this is the impulsive move, how the hell are you gonna predict where that impulsive move is gonna end? You can predict, you can kind of gauge where corrective moves might end, but it's almost impossible to guess where the impulsive moves are going to end. So you're going to get stopped out of that trade every time. Why not just wait? Why not wait for the market to do that? And now that's a break of structure, and then catch the move up. And while it's falling, if it does a retest on this side, if it's doing a retest on this side, everyone, you know, still hoping for the buy. If it's going to continue as an impulse, let it continue as an impulse. And off that retest, still catch the sell. Still catch the sell. Give me a second here. Let me log in. Let me pull up the scanner on the side. Let me show you. All right, let's look at scans that lost that you could have still made money off. That's where you guys don't get it. The harmonic scanner, it's finding the best pairs for you to go ahead and trade. Stuff that's going to move this week. Stuff that's going to move tonight, tomorrow, day after tomorrow. That's what it's looking for. When those ratios come together, those moves start to, you know, happen fairly quickly. These moves tend to happen fairly quickly. So take advantage of this tool. Everybody has this, unless you only got your digital currency pack. But look, this is beautiful. Something that should set up for next week. Something that should set up for next week. Trade the breakout retest. Right? I'll mark this up to show you guys how you would go ahead and do that. AUD CAD, look. Ready? Here it is. Here's structure. Actually, the structure, you would have probably been in this trade already. Here's the structure back here. Broke. Right? This was the newfound resistance. Where else do I like it? I like it right here. Ceiling, broke, no retest, found support, The scanner probably called it when it was getting this close. You would have seen this. This hit stop loss, but you would have known to not get into this yet, or you got into the buy from down here. And that's a nice 37 pips on AUD CAD. Oh, yeah, you're right. Even on the digital currency pack, you have it. Yeah, so everyone has a scanner. Everyone has a scanner. And this is the most underlooked, underutilized tool in the entire company. 37 pips. What do I care about the sell for now? It told me what pair to trade. Don't get blinded by what it's telling you to do. Keep it in mind, but don't get blinded. Okay? GBP NZD, this is not ready yet. This is not ready yet. This is not ready for a buy yet. Here's the level of resistance, right? This will be a short term level of higher low unless we break that resistance. Don't worry about this. Don't worry about trying to sell here, or don't worry about missing this, right? Everyone's like, oh, I missed the harmonic scan. It's almost at TP1. What? There's still going to be a correction. There's still going to be a correction. It's still going to break out, and it's going to have a bigger move. This is where the bigger move is going to happen. After it breaks and retests this structure. Or it breaks and retests this structure. This consolidation is the correction. It's still going to impulse. Come on now. Where else? What else has hit stop loss? Euro USD, right? Everyone's like, oh, I missed it back here. Why? There was the breakout. This is the break of structure. We're still getting retests. It really hasn't gone anywhere yet. We're biased to the upside, but it might as well come back up into the zone. Come into the zone, right? Fuck. Euro USD. All right. Come back into the zone and then snap out of structure. Snap out of structure. Give you the retest and then go. Or what is it going to do? It's going to continue. Give you the retest of this structure and then go here. This zone is where you buy. This zone is where you sell. Not here. It's dead in the water. Don't sell here. Wait for it to move, pull back, and then it will go. Even Christopher Terry in the IML Academy tells you to use the scanner like this. Even Christopher Terry tells you to use a scanner like this. But everyone's like, copy and paste, copy and paste. No, boo. Do the skill. Learn the skill. Mark it up. Understand the market. If there was no IML right now, there would be no more copy and paste. Learn how to do this for yourself. I don't need a scanner, but it helps for sure. It helps. GBP USD, right? We talked about this one already. Look, smash TP1. I tell you, when it's this big, this thing is going to go to TP2, if not further past that. If not further past that. There are scans where they go forever and ever and ever. What else has hit stop loss? Look at this, right? This is honestly the best example of I missed the move. That impulse hit TP1. Okay, cute. It's going to come back, retest, and then give you another impulse that was bigger than the first one. If you were so worried that this missed the move for 64 pips, you wouldn't have caught the move for 123. Guys, which one would you prefer? 64 pips or 123? Let me get the answer in the chat. 64 or 123? $123 every time. Every time. If you have a different answer, get out. 123 pips. Mad simple. Mad simple. All the market did was break structure, retest that structure, and then continue. And 20 BT gives you the exact entry you need. 20 BT will give you the exact entry you need, right? And that's why I said this is not more of a, what is DC scanner? That's the swipe coin scalper. That's still coming out. It's not out yet. But that's what you guys need to understand. You didn't miss anything, right? If you didn't miss anything, there's hundreds of pips. There's like look at how many scans this thing has for you. Look at how many pairs it has for you to trade. You didn't miss anything. Look, like this is still on the scanner. This is still on the scanner. Gold for the buy. It hasn't gone away since 2018 of last year. The same harmonic pattern. You could have traded this forever. You could still be trading this. Just the structure. All that has changed is structure. USDCHF, right? We talked about this one. Right? The harmonic scanner called the correction. How do I know it's the correction? Because the impulse is stronger. This is the correction. Perfect. I know where I could potentially correct to, and after that, I'm going to continue to sell the market. If it breaks structure again, then I continue to take this thing up. Is this making sense? Is this making sense? When you think the 63 pip you missed, what about the 72 pip move that you didn't miss and it's still going? This is probably still going to go. Right? Why do I think that? Because the market is also showing you, I have it marked up on the other thing. Head and shoulders. Head and shoulders. So understand market structure and apply that to your 20 BT. And I'm pretty much like, I don't like to say the word guaranteed, but like this shit will change the way you trade. Just looking at this and applying it to the chart. Looking at that and applying it to the chart. Broke these lows, no retest, continued. Gave you a low, broke the high, came back down, broke this. Here's the retest. Here's the retest. Wait for the 20 BT so you get in on the momentum wave, less drawdown. 34 pips. Euro GBP. Oh, crap. My bad. My bad. Y'all can see it now? Okay. Yeah. Look. Does this picture that not look like this? Does that move right there not look exactly like that? This, it's right there. I drew it. And it's right there on the chart. It's right there. And then we have a break of structure and the market continues the other way. And then does this Does that not look like that? Let me get a 777 in the chat. If you see that uptrend right there, if you see this uptrend, let me get a 777 in the chat. This shit ain't hard, dude. Come on now. You know what the market's gonna do next. Impulse correct, impulse correct, impulse correct. Oh, what comes after the correction? Impulse. Come on now. This is easy. This is easy. You just gotta apply yourself. Just apply yourself. It kept going. Then it broke the low. Right? No retest though. So it's a fake out. Came back down. Alright. Here's my little fake harmonic pattern. Not really a harmonic pattern, but it kind of has a structure for it. And continuation. Oh, the market's going to sell. The market's going to sell. Why? Did we break the low? No. So what happened? Continuation. Come on now. Come on now. Now, I'm going to mark up NZD/USD. All right, so I'm going to give you all a free trade. It's off the harmonic scanner. 1 hour, right? The harmonic scanner was calling what? The sell. Let's show you how I will mark this up. Okay. First thing I want to identify are my points of structure. So this high is important, that high is important, that high is important, that high is important, this high is important, right? And right here is where we have the break of the downtrend, right? You can use a trend line to help you determine, help you with that, but trend lines are irrelevant to me. I don't really care about a trend line. It's just there for you to easily identify the lower highs, lower highs, lower highs, lower highs. Okay. So we have break a structure. Then we can identify right here. Right, my levels of support and resistance. I'm gonna write this down for you guys. My levels of support and resistance have to be just that. So the levels have to have been both a ceiling or resistance and a floor or support. SUPPORT in the past. They have to have acted as both, right? So I can see this level was resistance and I can see this level was a floor right here. So this is valid. Okay? This is valid. The market didn't give us a retest. No worries. Okay? Oh, I missed the move is what everyone's going to say. But why? There's other levels to look at. Right here. Ceiling, floor. Broke. I bet you there's a retest on the 15-minute. Here it is. Here's the retest. Broke out. Quick retest. With 20 BT, you would have caught the move. After this pullback, got the flat bottom candle. Ready to go. Ready to go. I already know everything else is lined up. I just know just by looking at the chart. If you held on to this trade, 39 pips. Oh, but Arjun, I'm not awake at, what is this, 10 p.m. I go to sleep. Okay, fine. When you wake up, look for another level of support and resistance. I woke up. All right, here. Let me get rid of that excuse too. Right? Where's it at? Here's another level. Floor, 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 partially a ceiling. If I go backwards, there it is. Ceiling, ceiling, floor, floor. Valid level. Draw them wick, wick to body, wick to body, right? Extend it out. Still valid, even though it wasn't that, that relevant because it was in a corrective mode. But once we had that true breakout, we have a true retest. Okay? Drop it to the 15. Oh, I wasn't awake at 10 o'clock. Beautiful. I wasn't awake at 10 o'clock. Beautiful. When this candle opened up, it probably was a flat bottom. If not, you entered all the way over here at 11 a.m. If you're not up at 10, you should be up at 11. If you're not up at 11, you should be up at 10. There's no reason you missed both of them unless you didn't have the charts marked up, didn't do anything. And if you work, this will work. If you use risk management, your account will compound. This one gave you 24 pips. Let me give you the exact entry. Right? You went in, you had 5.5 pips of drawdown, and it went up 16. If these started as flat bottoms, you could have had an entry anywhere here. And that would have gave you 27 pips. And this is NZD USD, so it's a slower moving pair. But the point in the case is it's easy to catch these pips. If you held on to this trade here, this one gave you 45 over a day. If you held your entry from here, it gave you 45.6 pips. Now what's the market going to do? Correct. Where is it going to potentially correct to? You can use the Fibonacci tool to give you potential areas of corrections. You can see that we have a level of structure at that 38.2%, and we also have one at that 71%. So these are the two areas, right? The harmonic scanner is telling us to what? Sell. And that harmonic scanner is helping us catch this corrective move. If it happens. If it doesn't happen, we're just going to continue. This is the harmonic pattern. I don't even got to look at it. It's right here. X, A, B, C, and D, somewhere in here. This is the harmonic pattern. So when we break, so back to how you can trade off of this right now. Let's give you the right. Hold up. Let me give you the right here, right now setup, and then I'll take questions. Okay? The right here, right now setup. This is the setup. This is our level of resistance. Was support, was the ceiling. Perfect. Wick to body. I'll use that one. Boom. Okay. I like to do them in light blue. The green ones I just use to map out my structure. Okay. So now what have we done? We've trapped price, right? This is Chris Derrick's strategy. Understanding how to trap price. Price can now only do one or two things. Continue its impulsive move, give us a retest and continue, or break here, give us the retest, and give us TP here, here, or all the way down to here. And then continue in either direction. But we just want to capture pieces, right? This piece will be 61. This piece, I don't even know where this could potentially lead to. I'll look to the left more. This piece could potentially give us whatever we want. 200, 300, 400. That's it. All right. Now that I've kind of went over it, given you a free setup, this is what I'm going to do. I'm going to go ahead and take this setup, and I am going to screenshot it and put in the chat. So you all have something already marked up for you and looking at for next week. So I don't know what to trade. I can't find any setups. Throw that bullshit excuse out the window. Here's the setup. You know how to trade it. You know what the 5 steps confirmation are. All right, cool. Questions? Somebody?
Yeah, I was when you say the big wick to the body, then in here, sorry, has to be a little less. In here, you have wick to the body, and there is also retest here from the red candle, and you can.
That's a little too. Oh yeah, I could see
because
that.
Chris Eric says that also about this wick and bodies, and when you go to the upside, then you are looking from this wick, and on the correction in here. So then you enter the trade after the red candle in the opening candle, and when you go to the downside, you are looking here and here to the closing blue candle. So if you drew the lines there in here in the left side, and you will see the same symbol, because he's not doing so long lines. He's just doing what is actually doing, like for instance, he's I believe so. his lines should be like, this wick to the body, like you drew almost, and also from the downside, because he's not literally checking the before, the line. He's just checking the actual price.
Okay, cool. So you could do it like that, but what I find is when I have structure mapped out this way, you'll start to see that price will automatically come back to those areas, right? I had this mapped out because of structure, right? This was a lower high point, and the market came back right to that lower high point before making that next decision.
Yeah, for sure.
So I'm okay with if I miss that move because I catch it again right here, or I'll catch it again right here off of this structure point that I found, right?
Yeah.
So I'm okay with missing out on a couple pips, or 1 or 2 trades, and rather having it the structure way. But you could do either way. It's just about identifying key levels, which whatever way you find best works for you, do it that way. I just personally find structure is king always, and it will always lead back to structure. Market will always come back to structure.
Yep. Okay. Thanks.
Awesome. Anyone? Other questions? Questions, comments, concerns? Going once, going twice, 3 times. Oversold, overbought. All right. Here we go. So if y'all got value from this, all I would ask is, you start to get more active in the group. When we throw out markups, throw out your own markups. All the trades that come out in the Harmonic scanner, the top 3 or 4, go ahead, mark them out every single day, place them in the chat, and get feedback. Get feedback. Your charts are not going to get better if you're not getting feedback on your charts. So if you guys are ready to work as a community and really ready to take this as a team effort, You know, trading can be very difficult if you don't have somebody in your corner telling you, you know, that you might be making the smallest mistake, right? The smallest mistake that might need a correction, right? That's all it is, right? Slight little nuggets when you're first learning how to trade will affect you to a massive level, right? And I told you guys this was going to be an advanced training on how to use the harmonic scanner with the 20 BT strategy, right? This is not the simple basic. I'm going to go over all the 5 steps, right? That's what the video is for. This is level 2 trading on how to use, you know, how to understand the impulse and correction of the markets, and, you know, get it to that level. With that being said, if you all got value from this, let me just whip out my Instagram real quick. All right. If you guys got value from today's training, let me get some dollar signs in the chat box. Let me get some dollar signs in the chat box if you got value from today's training. And let's kill this week, guys. Let's have an insanely profitable week this week and crush it on the charts. With that being said, peace out, familia.
I love you.